My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome back to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave Dubois. And have you ever wondered how to transform small land investments into lucrative ventures? Well, today, my guest, Mason Klement, a seasoned land investor with a knack for scaling businesses. He's here to unravel the secrets behind maximizing your returns in the real estate market. Mason, welcome to the show. Great to have you here. Yeah, it's I'm always interested about the land side of things, especially when we're talking about ground up developments, and it seems like you've done some of that. So before we jump way down that rabbit hole, which I'm definitely gonna like walk you down into, you've had significant success in land investing. Could you share some insights into your journey, particularly how you transition from like smaller flips to these larger scale deals?
Okay, sure. So if you go back to 2019, I actually started my real estate investing journey buying 2 single family houses, and they weren't really cash flowing, kind of got burnt out. I didn't know what I was doing. I bought them on the MLS and didn't realize that the money's made on the buy and not through necessarily like the cash. That's obviously determining the cash flow and everything. So fast forward a year, I joined a self-storage mastermind, which still love the asset, interesting. Got some stuff under contract. I was doing that for about 6 months, and some deals fell apart, and I've been learning about land on the side. And then I jumped, head first into it in December 2020, sent out my first mailer, and was just targeting smaller, like quarter-acre lots, buying for about 4,000. I'd sell for 6 to 8,000, just to get my reps in and just build that confidence. And typically, you need at least like 10 deals to start learning the ropes, understanding what's going on here. But I also didn't want to do smaller desert squares that you might have heard about, where you buy for 300 and sell for 1,000, where it's like, oh, I'm tripling my money, but it's like, that's not life-changing money either. So it had to be a little bit more, an amount of money that I would take a little more seriously on each of the transactions. So after doing, I'd say maybe 10 or 15 of those smaller ones, I realized that, I don't have to just use my own capital. I can just do double closes, or I could joint venture with other folks and stuff like this. So I started targeting more like 60,000 price, like market value properties, and trying to get them under contract for 30 or 40, so I can make like 20 to 30,000 spread. And since then, recently, like last week, I closed on about 100 acres that we're going to split into 3 tracks. And for that one, I raised about 230,000, and that's going to be a little bit more involved process, but I like it because I generally can have more control over the outcome and just do the underwriting, everything, and just be able to kind of magnify returns. What I've learned is that you kind of need these larger subdivide type of projects going on, and at the same time still having kind of the small to medium ones running in the background as well. So the way I see it is like, although the bigger projects might take longer, you kind of need them to like leapfrog over the smaller ones that might go faster, but having little smaller lump sums, and so you can have both of them running at the same time. You have it kind of a staggered payoff. Does that answer your question though, in terms of like kind of how I went from small all the way to this 100-acre deal?
Yeah, it's like you got more confident, and then you're like, I could like this is a deal. And then I think that's really important, is that you got comfortable knowing what is transactionable, and then you're just like, well, I should probably bring some people on, because this is a little bit out of my pocket money. So I bring some people on to the deal, and now we've got this larger transaction. So, scaling is always a challenge. How did you navigate the process of expanding your operations while still maintaining that efficiency and that profitability?
So part of it is the bottleneck is if you're trying to do everything with your own capital, because one quote I remember when I first started was, no one has enough money to be a real estate investor. Donald Trump doesn't have enough money to be a real estate investor. And obviously he does, but still you can always do more deals if you leverage other people's money, and then also leverage other people's time. And so I've gone through countless virtual assistants. I'm down to 1 full-time virtual assistant right now, because I realized that if I don't have at least one person at least sending out my marketing every day. We send out at least about 3,000 text messages to our list to
Uh-huh.
generate new leads on the buy side for acquisitions. If you
Yeah.
don't have that going, then you don't really have a business, you know?
Yeah.
And
Lead
in the
flow.
meantime, I need to focus on all the other things, transaction coordination, dispositions for existing deals. So
Yeah. The quote,
that
the quote that I like was, on the money side is you never have enough money for your dreams. Because Donald Trump could buy some junky land, but his dreams are usually pretty big. Like our dreams are bigger than what we have our pocket on. So we're just like, oh, guess we're gonna have to raise money. So, your
exactly.
focus on, you focus on various land developments, um, from wholesaling to ground up developments. It's quite diverse. I mean, it's mostly around the land thing. How do you decide which projects to pursue within these different, different project types?
At first, it really comes down to the numbers. So for the simple flips, it's for the past several years, most of us land investors have been shooting for like doubling our money. So
Hmm.
if I'm going to buy for 10, I need to sell for 20. Or if I
Hmm.
buy for 20, I need to sell for 40. Although with the market changes recently, people have realized that that's not always attainable. So you still need to have a reasonable return. But sometimes if I'm just going to double close and not use my own money, then I might be a little more lenient on that role and what the return is. But that's one thing I've learned is that on one of my first subdivide deals where I invested that capital, I was like, is this the best use of my money? And so for those longer term projects where I am putting my own capital in, putting my investors' money in, I do want to make sure that it's the most efficient use. So for
Hmm.
those, I'll look at for at least like a 3x equity multiple just to make sure that it makes sense. Because if we can't get it to that, or if it's questionable, if it's, oh, maybe it's a two, maybe they can double their money. I don't know. So then it's probably not a deal. I probably need to go back to the seller, renegotiate, or look at some other cost inputs there.
So it's very like a calculated thing then, as far as like, because land is an interesting thing because it's not really financeable. You can't really walk into a bank. They're not super interested in like putting money down on a square of, like you said, desert land. So you usually have to bring money to play the game, and finding capital is one of the common challenge for most real estate investors. Specifically, though, with the land side of things, can you elaborate on your strategies for attracting private investors to securing these funds for your deals?
Yeah, on the bank side for the debt, sometimes you can find people willing to play ball if it's like smaller community banks or credit unions and stuff like that. Although in this one we just closed on, we were working with a local credit union and they kind of acted like they were interested and said, yes, 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 provided
Mhm.
plenty of lip service, and then they denied us on it. And so we ultimately just went with a hard money lender. And I just had complete transparency with them, said, here's the numbers on it. I'm willing to sign a personal guarantee and then have my wife come in as an investor and also signing, and then also a college friend. So all three different personal guarantees. And then we were like, look, we'll just do 50% down. So it may not be like the sexiest of terms, or you're doing like 20% down or something, but it's like I know what you're going to charge is like a 3-point origination fee, 13% interest, 50% down. We already took that
Mhm.
into our underwriting model, so we know those numbers will still work for us.
Mhm.
So here it is. I'm just going to bite the bullet and get this deal done, get it across the finish line. So that's one way, at least on the debt side. And then on the equity side, it's again just kind of educating the investor, because it might sound scary to your point of like, oh, land, there's nothing to cash flow. And like, do people even buy land? Like, is there even a market for you? And that's the first thing we do, though, before I even start speaking with other equity investors, is we'll do a lot of due diligence on that market and make sure there is demand there. It's not just some completely remote area where it's very questionable if we can find buyers. So we'll look at like average days on market and just speak with several local agents that are experienced, boots on the ground, and they're telling us, oh yeah, for about that acreage size, let me run some CMAs for you, and I think it might take 9 to 12 months based on that price point and things like that. So we just have
Mhm.
all these different gauges and levers so we understand what we're looking at before we start presenting the opportunity. And then from there, it's just saying, look, I've done this before, and I think because of all these information, we synthesized it down and it's on a silver platter, ready to go.
Mhm. Yeah, and the other thing too, I've noticed with land, and maybe you can speak to this a little bit for people listening. people buy land and then they start coming up with all sorts of different uses because it's raw in a lot of cases. So they're like, I could do this and I could do that and I could do this. And it really does change the numbers when you look at its utilization. How do you stay in the land game without getting drawn into like what I could build on it? Or do you get into that?
Well, really the location and the zoning will dictate all of that. And you need to have constant communication with the local jurisdictions to
Mhm.
understand the likelihood of them approving something. And sometimes it's out in the county, maybe there's no zoning. I know certain counties, they do have strict zoning where it feels as if you're like in a city, but other times I've spoken with counties where it's like, yeah, you just kind of do whatever you want, as long as you're not like opening up a porn shop or a gun store next to a elementary school
Yeah.
and violating some like Texas like state laws or something. But I think also I found that people have a certain area of expertise. There might be people that they're just doing industrial space and like that's what they're looking at. Can I develop a self-storage facility or outdoor, industrial storage space or something, or can I develop a multifamily property, or can I do single family? And so it also just depends on what is that highest and best use of the property.
Yeah.
So that way you're not going like 50 different directions. You just like
Yeah,
first,
that's the
like I
thing
speak with the
is, you know,
jurisdictions, like I'm sorry. It's like, what do you want?
yeah.
What do you let me do? And then I go from there.
Yeah, because people are looking at the land, they're like, it's so big, I could have like 200 apartments, or I could build a this or that. And it's just like, do the buyers come to you, or are you bringing those ideas to them? How does that exchange work on the land side for people who are just getting started in the land game?
So again, it depends on like the highest and best use. And so for larger pieces that are like say 50, 100 acres and up, um, it could be if it's close enough to the city where you can tie into the city utilities like water and sewer,
Hmm.
then it might make a great subdivision for a national or large regional builder, like say like a D.R.
Yeah.
Horton or Lennar or Pulte Group. And you would just call them up and say, "Hey, are you actively buying this market? Are you interested? I noticed you had a development over, across town or something like that." And then you can start to have those conversations and understand what they want and take it through the entitlement process and basically just tee it up for them, make it shovel ready so that they can minimize all of that risk about whether or not it's going to be approved for that type of
Hmm.
project.
So when you're looking at, I would say around the business growth, what specific tactics are you implementing to get your conversion rate up, to identify and effectively, do these leads? You're texting out XYZ. What are you doing to really dial that in when you're looking at, because early on, some people will be like, I just want any sort of land. And then now I want a specific subset of land. And do you have plans to niche down or get wider, or what does it look like for your growth projections as to what you're doing these days?
Yeah, so the initial approach that I think you alluded to is like the shotgun approach, and we're still doing that. And it does kind of work, but I am planning on doing a little bit more of a sniper approach where it's a lot more targeted and focusing on just one type of property, like distressed properties like tax delinquent lists or things like that. Um, Another thing we're doing is looking at like code violations for specific cities. Like we know we want to, for example, I'm based in the Dallas area, so I know I can find builders or have builders already lined up for lots in Dallas. And so I might look for specific code violation stuff where people are neglecting the property. It's not owner occupied. Well, especially for land, like how are you going to occupy it anyway? Because there's nowhere to
Mhm.
live yet.
Like
So
tax delinquency, or they haven't seen it or been around it for 5 years, and it's showing up on the county's website like, hey, this thing's clearly distressed in its attention.
yeah, exactly. But even only so that's a little bit more the sniper approach where it's just like picking them one off, just doing like a single dial cold call. And there's totally nothing wrong with that, except you obviously can't get the volume up. But if you can get a higher conversion rate, then it could be justified. But
Hmm.
even on the shotgun approach, you can whittle it down. So in certain markets, we may only look at like 1 acre and up because it's like I don't want to waste my time with doing anything smaller because I know that the market value is not going to be there. We can't get the numbers we need, or maybe it's 5 acres and up or 10 acres and up. Or if we're looking just for subdivide candidates, like I might look for only 50 acres and up. It just depends. And it also depends on where we drew our polygon in our software to determine how far away or how close we are to the city center and all of that. And then also when we skip trace the data, you can also filter by age. And so that's another one that we consider is if it's someone, say, less than 60 years old, then maybe they have some more grit in them. They're like, no, I'm going to fight tooth and nail just to get the best darn price I can, versus someone else who maybe I combine it with like the age, but also the years owned. So maybe they're 60 and they've owned it for like at least 10 years or 5 years. I would say at least 10. Then they're already emotionally disconnected. And usually they purchased it, they plan on building on it with their spouse. Now the spouse has passed away. And a lot of times I have these conversations where it's say, yeah, I talked with my daughters last week and they said, when are you going to sell that old thing? You don't have any use for it. Your mother passed away 3 years ago, stuff like that, where it's like, oh, I'm just tired of paying taxes on this. It's just kind of a burden. So that's kind of the problem we're solving there, is just getting it off their hands, helping them liquidate an illiquid asset and move on.
So, reflecting on your successful subdivision project, what were the critical factors that contributed to its profitability, and how can other investors kind of replicate such successes in their ventures?
So trying to think. First, again, it's just knowing the market and underwriting, looking at comps, speaking with local agents. So on that one, the one I'm thinking of, it took 15 months. So I bought it for 200,000, and I was looking around and I couldn't really find comparables for 6 acre tracts, but I did find for like maybe 1.5 or 2 acre tracts, and it looks like they were selling for maybe 150 or maybe almost 200,000. So I was like, oh, okay, right there. If I just split it into 3 2 acre tracts, then maybe I could like triple my money on this and get close to 600,000. So I then spoke with my local agent that I have in that area, and he was able to pull some data from the MLS that I wasn't seeing, that wasn't being pulled over from Redfin or Zillow or the other easy sites you can look at. And then from there, it's just, kind of managing your budget and doing a lot of underwriting in terms of like how we had for this one, we had to install 3 water meters. We installed a gravel road because 2 of the 3 lots were flag lots. And so we also had to understand what's that cost going to be to build the road. And a lot of other potential subdivide deals I've done underwriting on, I've had to kill the deals because of that reason. Sometimes a road construction cost, when you're doing it to the certain jurisdiction specs, like the county specs or the city specs, whatever, like it's like curb and gutter and everything, it's like, oh, hold on, this is going to cost $300,000. My total profits maybe $300,000. So it could totally kill the deal.
Yeah.
So you just have to know all those things before you start pulling the trigger. I mean, it is good to like do ready, fire, aim to an extent, but you do need to understand what you're aiming at and have all the stuff teed up.
Yeah, it sounds like you've had, like you said, I've had to cancel a few deals because of XYZ, and some people get stuck going down that road and promising or not taking into consideration like you're saying, the county's cost, the requirements to do a road, and that can kill the deal. So when you look at everything you've done in real estate so far, what would you say your unfair advantages? What comes easy to you that other people might find difficult to do?
So I think that what I found really helpful, surprisingly, that it was a direct transferable skill. My background's in finance, and before doing real estate, I had started out after graduating. I was doing, we were investing in bankruptcy trade claims. And so unsecured pieces of paper, basically a bankruptcy filing happens, and we would reach out to the supplier to that bankrupt company and say, hey, I know you're owed money on these invoices. There's no collateral there to just take back. You can't like take back a piece of equipment. So I'll just pay you a discounted amount to that. And then we'll step into your company's shoes for the remainder of the bankruptcy process and take on that risk. And if we make a little bit on it, it's our risk. If we don't, that's also our risk, whatever. And that entire process is almost identical to reaching out to property owners. And so I think just having that familiarity and building lists and reaching out to people and just having this entire sales cycle already imprinted on my brain of building that pipeline and getting leads and closing leads, getting stuff signed has been really helpful.
Nice. Yeah. There's a lot of dialing in real estate. There's a lot of conversations in real estate. But I think what's interesting about what you were talking about with the bankruptcies is there's like a sticky situation also inclusive of what you were dealing with prior. And it's now here we are again, calling up 60-year-old Jeff, and he's like, yeah, I'm in a sticky situation with this land. I don't need it. There's some like land, some taxes on it. Can you help me? And you're like, sure, let's take a look at it. So, when you look at people investing, so we got investing in these properties, is it more of an in and out thing where you take the money, you do the deal, you pay them back, and you guys are done? Or have you started joint venturing on anything like in the long-term sense? Like, we're going to build on this, we're going to buy this, we're going to sit on it for 10 years. What does that look like as far as your bringing on investors to your business?
Yeah, so right now it's on a property specific basis. It's not like a blind fund where it's, invest X dollars and then we'll invest it in as many properties as possible for a 5-year time period or 10 years. It'd be nice to get to that point, I suppose, eventually, but right now it just seems very straightforward and easy to say, look, I have this specific property. Here's our business plan and what we're going to execute. We think it'll take about this long, and here's probably what the returns are going to be conservatively. Are you interested or not? And then they'll invest on a deal by deal basis.
Nice. So if people want to connect with you, they want to find out more, what should they do? How do they find you?
Sure. So if you're watching on the videos, my phone number down in the corner, it's 469-838-5437. And I can also be emailed mason@seliondev.com. It's SELIONDEV.com.
Nice. Well, I really appreciate you stopping by, Mason.
Thanks for having me. This was great. Really enjoyed it.
No problem. Until next time, guys, we'll catch you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.